Hey everybody, it's Pete. Good morning. Thank you so much for joining me today. Welcome to a new episode of today's Best Stock Picks. Well, we got some carnage yesterday, and we're going to take a look right over to the sector rotation sheet and the stocks to buy that we discussed yesterday, the feeling that the market showed us by doing the homework. That's a big part of trading, but I want to start off today with saying something that I preach over and over and over again in our community. And by the way, if you're finding this stuff overwhelming, the market right now, and you're just not sure what to do, click the link below the video and just learn about our community. I think you'll find it pretty interesting. And the big thing we want to talk about is managing risk. But we're going to talk about that as soon as we get back. Okay, so everybody has their favorite stocks. Everybody has certain stocks that they love to be in, right? Everybody has certain stocks that they love to buy no matter what, certain stocks that they love to buy and believe that no matter what, they're going to come back. That's great. That's great to have that confidence. That's great to have that conviction. That's great to have that bias. But I'm here to tell you, if you didn't trade through the financial crisis or after the dot-com boom, which is actually when I first started, the market is bigger than everybody. There's no other way to put it. And it's one thing to be in love with the stock. It's another thing to actually look in the mirror and say, are you trading or are you hoping? And if you find yourself hoping, you need to ask yourself the number one question that I preach over and over and over again. If you didn't have it, would you want it? Let that sink in for a second, because the real answer comes back in a heartbeat, and you get this feeling of maybe not, or maybe not this much size, maybe not in this time horizon. So I'm going to challenge you right now. Again, look in the mirror. You can't lie to yourself. Look in the mirror and say, am I a trader or am I an investor? If you're an investor and you're doing this for the long term, that's one thing. But if you're a growth investor or an active trader, at some point, when you buy stock, preferably before you put the position on, you need to know what you plan to do before you put the trade on. Because I'm going to tell you something right now that it's a fundamental thing of being a successful trader. Averaging down, if that's in your brain right now, averaging down into a losing position will wipe your account out on one trade that doesn't come back. I'm not here to rain on anybody's parade today. I'm here to wake you up. Now, getting into today's price action, you shouldn't panic. If you have not made a decision up till this point, so in my swings, I had a couple of basic material stocks, a financial stock, and I held on to it because I still liked the idea. And quite frankly, they were still positive yesterday. You need to know what to do. Now, a certain situation that comes into the market when it's moving against you, you have two choices. And this is kind of a professional thing to really think about. Number one is you can get out because you had your stop loss. Number two is you still really like the idea. Maybe your timing was off. Maybe the market's doing what it's doing the last couple of days. What do you do then if you don't want to just get out of the position? Smart traders, active people buying stock every single day, you scale out. Let's say you have 1,000 shares of stock and the thing flies against you as soon as you put the trade on, but you look back on everything and it was a perfect setup. You would take that trade 100 times out of 100 times, but that minute you bought it, we call in the boot camp, you get that one FU candle that goes down and hits an area that you'd look to get out of the trade. So if you have 1,000 shares, there's nothing wrong with taking 500 off the table and reevaluating, because let's think about the two scenarios that could possibly happen from there. Number one is it keeps going down, and now you're losing less on a position that just doesn't recover in that time period that you want to be in the position. Number two, best case scenario, the stock finds a bottom and starts to work its way back up. Maybe you see a well-bid candlestick or whatever it happens to be, big volume day. We call it an energy candlestick, big green candlestick with a lot of volume. You put the shares back on. Your job as a stock trader, when you're buying stock, we're doing two things. We're managing risk, managing expectation, managing risk, managing expectation. And then the next part is you start to learn how to manage profits. And that's a fun place to be. However, if you don't respect risk, if you don't respect your stop loss when you're managing stock, if you are trading from an ego perspective as opposed to trading from a management perspective where you are running a trading business, it's going to be very hard for you to be successful. It's going to be very hard for you to see your account grow consistently because you're trading to be right. Stop trying to be right. Don't buy stock to be right. Be stock to run a trading. Buy stock to run a trading business, which kind of takes us into what I want to show you yesterday and how that translated into game planning homework, translating into the type of price action we have, and whether or not you should have been a buyer yesterday for a little bit longer term. Now, I will be looking to, as I said yesterday, but I didn't get an entry signal. That's the thing. I got a lot of people yesterday saying, you said this about buying that stock. You said this about buying that stock. Yeah, but listen to the whole sentence. I said at a certain price. It needs to do something before I get involved. I want feedback from the market, and you should be inspired to do that same thing in your trading. Buying it on the way down could be a plan as long as you're working the order. So you might want to have 500 shares and accumulate 500 shares on the way down. That's different than averaging into a position. Averaging into a position or getting more than you already plan to is bad. That's just not good trading. It goes down and further, and it's not good. But let's just say you knew you want 500 shares. So you buy your first 100 shares, or let's just use 100 shares as an example. The way to pyramid into a position when you're working the order within a window is if you're doing it on the way down, which is not averaging, we're buying the entire position, which is the way hedge funds and everybody who works positions for a living, very rarely, unless you're day trading within a really tight window where you go in with all of your share size, very rarely, if you're looking to build a position over time or for a little bit longer window, do you just go in with all the share size. So if it's going down, you have bullish order flow prior to that, the stock's coming down like we're seeing now, you buy 100 shares, then you buy 200 shares, and you buy 300 shares where you believe the ultimate support will be. That's the way to build a position. We only wanted 500 shares heading into the trade. We got 500 shares, but we worked it in a box into what we believed would be major support. Maybe you worked it here, the second piece, and then the third piece, you got confirmation from the market where you saw a bottom, you got higher highs, higher lows on the time frame that you're looking at. Then you put that trade on, and now you have your full position. And now you have your stop loss from where you have your full position. That's how you work in order. So how does that translate into today? If you did not make a decision over the last 2 days, if you had positions that you're sweating, you couldn't fall asleep last night, well, now you need to make a decision today. Do you scale out? Do you maintain your sanity and get out? Do you reestablish your sanity and just put the position back on? Do you take some of it off and look to add back on, like I just said before? The big thing, though, is you can't panic. You need to maintain your composure when the market's rolling over like this. And this is the difference between somebody who is ready to trade from somebody who right now, and all of the message boards all over the internet right now is, what do I do? What do I do? What do I do? You need to know what you plan to do before you put the trade on. And if it rolls against you, you unemotionally scale back, manage risk, and you look for the next idea. You need to be able to have in your head to say, where am I going to make this money back? You get out of a trade, where am I going to make this money back? Put that in your head immediately. So we're going to translate that over into what the market's doing right now, and we're going to take a look at some stocks that are actually holding up while the market's rolling over. So if you remember yesterday, this is what we looked at in the market, and we said very hard to find good ideas right now. We noticed that the individual industry groups were having fewer and fewer stocks that were positive over the time period that we're looking, and this is ultimately what ended up unfolding yesterday. So how does that translate into today? Well, the futures are actually down again today. So what do we need to see? We need to see signs of life. So if we actually go over to, let's go over to the SPY. What does it actually mean? What does it mean to see signs of life? So we're going to actually bring in our favorite tool of day trading specifically, and you can do this on a weekly chart or a monthly chart. So here's the price action 2 days ago, right? This is May 11th. This is where the SPY ETF opened up. That's the line in the sand that we watched during the day. That is the open price. Now, what does that do? That's tape reading. That is the first print for the day. And we want to see, is price moving closer to or further away from that line in the sand? That gives us a reference point. That's our North Star during the day. We need to see price action do this and stay above that today. And preferably, especially on the hourly chart, we would like to see it, we would like to see it actually showing higher highs and higher lows like that. Let's take a look at yesterday. If we zoom back to yesterday, that's what happened yesterday. That's the opening price yesterday on May 12th, and you can see where price action was the rest of the day. That is not what we want to see. What we want to see is what we saw over here, where we actually opened up here and stayed above it. That's what we're looking for today. So what does that mean? That means now at 6 a.m. in the morning, you already need to know what you plan to do. Now, maybe you're not up. Maybe you're going to watch this on a replay. That's fine. But before the market opens, this is what makes you a trader. This is what separates you from being a chart reader from everybody else who is struggling. You need to know your line in the sand. You need to understand this is the price that matters to me, and you need to monitor whether it's above or below. Now, here's the cool thing, and I know I've mentioned this before, especially if you're a regular viewer of the channel. And if you're not, please click down and subscribe. I'd really appreciate it. Smash that thumbs up button. You are a tape reader already. Like, this sounds like tape reading. That's the stuff that goes across CNBC. No, those are ticker quotes. Tape reading means if you have a price, you need to know in the bottom visceral part of your body that, yeah, that stock is super strong because I have that one price and I know how to watch it. And I know that price, right? Buy 100 shares, buy 5 shares. You'll know better than anybody on Wall Street if that stock is strong or really weak. So if you're in that position, it keeps melting away, melting away, melting away, you're managing risk still. But if it's in that position and it's a little bit higher, it goes up 50 cents, pulls back 20 cents up, all of a sudden, you know better than anybody because you have a stake in that stock. You bought that stock, and now you know that stock is strong. That's what tape reading is, and that's what we're watching today. So you got to keep your head today and know your levels. Know the market, know your stock, know other stocks. Put 5 different stocks in the same sector of the stocks you're carrying in a watch list and pay attention to whether or not they're strong or continuing to roll over, and then make one of those 2 decisions that I talked about before: scale out or get out, and look for a spot to get back in. So it's actually 3. All right, so we're going to head back over to the charts. We're going to actually talk about Disney today, which has earnings. And the big thing is from Zacks, we're looking at EPS of 35 cents. Now, what's interesting about Disney stock is the numbers that came out roughly about 6 or 8 weeks ago, right here where they hit all-time highs on subscriber growth, was just through the roof. But since then, we've done nothing but decline. So again, getting back to what we discussed yesterday, we need to see a trade above this level. We need to break the selling that we're seeing right now in order to find a spot to feel conviction. There's no reason to be buying it on the way down if the smart money, if the deep pockets are continuing to sell the stock. You want to piggyback the smart money. You're not looking to fight them. So Disney right now for me needs to get above 185 before I start to become a buyer. Now that might change today. I don't know, but now it's all the way down here with the rest of the market, which, by the way, we took a quick look before. The futures are still trading down. What do we need to see them do? We need to see best case scenario today opens lower and snaps back and closes above the previous day's low. So think about that now. Again, we're talking about what price action we need to see, whether it's your stock, whether it's the market. Best case scenario to now, we're going to see stock open lower. We want to see it circle back up and get back above the previous day's low, close above the open and close above the previous low. That's when you know the buyers are stepping back in and be like, okay, at this level, all of this inflation number, I'm going to be buying stock here because now it's at a more attractive price. And we've been talking about this for a while. That distance between the optimal entry and the target needs to be expanded to justify the risk. And we're getting that right now. Okay, so we're going to head back over to the charts. There are some pockets of opportunity, and specifically, we've been trading energy stocks pretty aggressively. You can see VLO actually, we've had this level of 82. It actually peaked its head above 82 yesterday, came back in with the rest of the market, but I still have that 82 level. We're going to stick with the area, the basic materials that have been strong. You can see CF actually consolidated, one of the top stocks I'm going to be looking at today. CNC also held the bid today. And we have a couple of other stocks that have pulled back, but I think we're going to take a look at some of the stocks that have earnings today. Actually, I want to focus on DDD, which had good earnings a couple of days ago. This is actually a pretty good example of what to look for and being on top of your ideas. Earnings were great. but it's only 1 day of buying so far. Now, we consolidated on heavy volume after that 1 day of buying. If we can trade above yesterday's high, DDD will actually end up being pretty exciting to me again. So we're going to stick with the stocks that have been strong. NUE has been on fire. NEM, X, swing trade, we're still there. Opened up a little bit lower. It looks like it's opening up a little bit lower again today. Probably going to hit our stop. We'll see after the open. But that's what I have for today. But the bottom line is this: maintain your composure because you planned what you were going to do before the market opens. Gave you my levels to buy Disney stock. That's what I'm going to be looking at. One other thing, this weekend is my wedding anniversary, my 1 year, so I'm not going to be around tomorrow. I just want you to know how much I appreciate that you're here with me. And if you haven't done yet, please click down, give us a thumbs up, and leave a comment if you have any questions. Have a great day, everyone.